Hello there and welcome to the weekly roundup for the week ending Friday, the 2nd of October. We hope you're enjoying the weekly roundups and do subscribe if you would like to receive free stock market content. So this week has been another really busy week over here in the UK. The focus has been very much on Brexit as the 9th round of trade talks have been taking place, and the question is, won't they be able to agree a trade deal? So far they haven't been able to, and according to Michael Grove, there's still a considerable distance between the EU and the UK, but he does believe that a deal can still be done. Obviously, time's ticking there because we have the UK government self-imposed deadline on the 15th of October. To be honest, the pound has seen some volatility, but it's actually just ending the week more or less, well, just down slightly, around 0.5% down versus the US dollar. I think this week the bigger focus has actually been on the US. So we've had the first US presidential election debate between the two candidates, President Trump and the former Vice President Joe Biden. Now, the debate was less substance and more name hurling, I think is the way to describe it. It was actually disappointing, and the markets were disappointed, and also they created a level of uncertainty regarding the elections, as Trump said that he wouldn't, or he still hasn't said that he would accept the result, and also said that the results could actually be delayed months or even weeks or months rather than being found out on the day after or the day of the election. That sort of prompted a risk-off move immediately after. However, better than expected US jobless claims boosted risk sentiment afterwards, and so we saw sort of a rally on the back of that, and that's risk sentiment's been moving over and driving markets in Europe as well. And then today, obviously, we've got Trump falling ill, testing positive with coronavirus. There's been some big news. We've seen a big risk-off move on the back of that. So stocks have fallen lower here in Europe, and also the US futures, whilst the US dollars picked up, as has safe haven gold. Across the week, the FTSE is trading pretty much flat, nothing major there. DAX is looking up to be around 1%. The S&P and the Dow were trading around 3% higher. However, we've got that 1%, which is probably going to come off on the open, so I'll be looking for about 2% gains across the week. Another big move has been oil. Oil's been on the back foot. Basically, concerns over the output of future demand is really dragging on demand for oil at the moment. Obviously, with rising coronavirus cases and more lockdown restrictions being implemented across the globe, again, that's just weighing on what the use of oil in the future and demand for oil. As far as single stocks are concerned, there have been some big movers. We've had Rolls-Royce has dropped 29% this week on the day that it unveiled plans to look for £5 billion. The stock fell 11%, not impressed with those plans, and also is down another 5% today. Another big mover has been Greg. They actually dropped 8% on the day of their earnings, of their results, but they're actually trading up 6% now across the week. So Greg's has been an interesting one. Their Q3 results were actually significantly better than their first half. So if we think this is a stock whose clients are basically office workers, or a large segment of their clients are office workers, so the fact that we're on this work from home has really affected Greg's. However, they have seen sales pick up in the third quarter. Sales are 72% of what they were pre-COVID. So given the circumstances, that's not so bad. The uncertainty remains because we've just had the government tell us that we're all to work from home again. So their future is a little bit uncertain, although they have been doing well from digital efforts. So and click and collect. And that seems to be offering them some support. Other big movers this week were house builders. Now, we had the nationwide house price index, which showed that house prices jumped 5% year on year. So we're basically seeing pent-up demand, the stamp duty holiday, and people reassessing their housing needs after lockdown is really pushing up demand for houses. On the back of that, house builders have had a strong week. Taylor Wimpey, for example, up 7% across the week. There are concerns, though, that this is not going to last, and that come springtime, especially with rising unemployment, the end of the stamp duty holiday, that house prices could suffer then. Thanks very much for joining me. Please do remember to subscribe and have a good weekend.